Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
Weekend strikes against Iran are weighing on sentiment today. Crude oil jumps above $70 a barrel. Software stocks are looking to rebound from some of their recent big losses. Strength today in energy, select information technology companies, and industrials. Weakness in consumer staples, materials, real estate, utilities, financials. Pretty broad-based. Let's take a look at the market numbers today. The S&P 500, down 0.5%, maybe a little bit less, down 31 points to 6847. The Dow Jones Industrial Average down 0.5%, down 272 points to 48,705. The Nasdaq down 65, down 0.25%. The Russell 2000's moving a little bit higher, so it's up 6 points, up 0.25%. Anytime there's stress in the Middle East, and I would say missiles flying equals stress for sure, there's always going to be a reaction in oil and gold. Digital gold, Bitcoin is up 3.4% today, up to 2333, sitting at $69,374. 10-year Treasury sits at 4.04%, barely moved. Gold up $53, up 1% to 53.04. It was higher for the day, and it's pulled back a little bit. Crude oil up $4 to $71.20 a barrel. Natural gas up 3%. That's a pretty big move. It's still a pretty cold winter on the East Coast. Those are a look at our market numbers for the day. Risk off is the prevailing disposition on Wall Street. The VIX is spiking higher. Volatility. I get excited as an investor. As a human being, I never like to see lives lost to missiles. Let's talk about this. This weekend, we saw a joint U.S.-Israeli strike on Iran, the killing of the Ayatollah Ali Khamenei, and counterstrikes by Iran on several other Middle Eastern countries. The combat operation is going to continue up to 4 weeks, so says President Trump, urging Iranian citizens to rise up and take control of their government. A natural consequence of this armed conflict has been a spike in energy prices, obviously. Oil tankers are reportedly scared of traveling and going through the Straits of Hormuz, raising concerns about supply disruptions. Qatar, the nation, has announced that it's stopping LNG production at the world's largest plant, natural gas and oil. Crude futures moved higher instantly over the weekend. And again, it's not something you ever want to brag about, especially with a war causing it. But we all saw on Wall Street, we didn't all see, but I highlighted for you at the start of the year or the end of last year and the start of this year, that the commodity rally started with gold and turned into silver, went over to copper. It was eventually going to hit oil, and it did, even before this. So inflation is the watchword for treasuries, whereas stocks this morning are tangling with stagflation concerns tied towards the rise in energy prices. The higher energy prices are undercutting airline and transportation stocks, including cruise lines. They're lifting energy stocks. Defense stocks and gold mining stocks are all higher. So there's a phrase on Wall Street, and it's almost grim. It's called, when missiles fly, it's time to buy. BTIG's Jonathan Krinsky commented that the S&P 500 closed Friday almost exactly where it was as of their last market call a few weeks back. They think the S&P 500 is coiled and poised for a bigger directional move. And yet, did it make a lot of progress? It's an odd way to get into where I'm going at with this, because Jonathan Krinsky starts talking about, and he's with BTIG Research, with the geopolitical tensions high. Typically, he thinks geopolitics are not durable, and especially when it comes to applying them to Wall Street. He thinks today is going to be messy on Wall Street, but he thinks the move on the S&P 500 is going to be higher, so he's calling it a tactical time to buy. He thinks you fade bonds and energy and Korea. Korea's stock market has been doing great. He's talking about the software sector, IGV, potential double bottom after an extreme downside move. The trend is clearly damaged. Very technical analysis, but he thinks there's going to be some upside reversion. Seems likely. Talking about fading bonds, potential false breakout for 10-year bonds. He thinks we move back to 4.2%. That we won't be able to crack under 4%. He's an interesting fellow, and he's well-spoken when he gets on CNBC and Bloomberg. The Korean markets, and you could buy an ETF tied towards Korea, KORU. It's had a historic move up, and ultimately his call is, hey, it's a moving average. It'll revert to the mean. It'll come back down. Interesting. The market sees nothing good right now, no bright side to the slaying of Iran's supreme leader, Ayatollah Ali Khamenei. The Islamic Revolutionary Guard is still there. In the long run, many analysts are coming out saying this is not going to be a disruptor to the U.S. economy. But right now, oil tankers being rerouted to avoid the crucial Strait of Hormuz. Energy names like Chevron and Exxon are moving higher. Piper Sandler upgraded CrowdStrike to buy from hold ahead of their earnings tomorrow after the market closes. It's a big thing that we're looking for this week because the software companies are being disrupted by AI, in theory more so than in reality. Barclays cut its price targets on the alternative asset managers KKR, Ares Management, and Apollo Global. Just the price targets kept the buy ratings there. It did reiterate a hold rating on Blackstone. Analysts are saying it's too early to know what the portfolio risk is with private credit. The co-CEOs of Blue Owl's Capital, I would say they're the fifth big player in private credit behind KKR, Ares Management, Apollo Group, Blackstone, and then Blue Owl. They did an interview with the Wall Street Journal over the weekend, and it was just, oh boy. So that stock's getting hit hard. And again, yet the private credit hasn't really materialized as a problem. Private credit will materialize as a problem as economies slow or go into recession. So they can hide a lot of problems in a stronger economy. NVIDIA plans a new inference processor designed to help OpenAI and other customers run their AI systems more efficiently. NVIDIA licensed a technology from Grok, which is a startup, for $20 billion last year. NVIDIA is the top semiconductor pick at Morgan Stanley, replacing Micron. Analyst Joseph Moore said, in September, we shifted our top pick from NVIDIA to SanDisk. And then in November, we shifted it to Micron. Now the thesis is that the strength in AI would still be in place. Driving earnings leverage in other names was the idea. And that while strength in NVIDIA is central to the shortages in memory, the earnings power was higher elsewhere. Morgan Stanley said the effect was much more pronounced than we had expected. Memory stocks, which were already up sharply when we made that call, are up 300 to 900% since then. It's a really good call. And Morgan Stanley's reminding us they made it. So when they say today that they're refocusing their top pick in semiconductors back to NVIDIA after bouncing around like a basketball, from SanDisk to Micron back to NVIDIA. And the memory stocks ran up 300 to 900%. Talking about the current earnings expectations that have grown for NVIDIA. Memory versus NVIDIA is an interesting debate. Which one is it? The tail that wags the dog? Or the dog that wags the tail? I don't quite understand that one. There's a commonly voiced view that memory stocks are pricing in a much longer and more durable cycle than processor stocks. Morgan Stanley actually somewhat disagrees with that. Their memory conversations with clients are very similar to NVIDIA conversations, a clear recognition that conditions are exceptional in both right now. But a very strong peak year at current valuations has been viewed as a more investable for memory because upward revisions are more dynamic. They're talking about the whole big picture of what's going on with NVIDIA and AI semiconductors and the AI ecosystem. You saw Dell report fantastic numbers on Friday. I think it was Thursday, and stock did well on Friday. We make servers with AI chips in them, and we make servers with memory in them. So the whole ecosystem looks pretty good right now. I better be careful how I say the whole ecosystem, because you may see like CoreWeave. I'm not a big fan of CoreWeave. They're incurring a lot of debt to basically rent AI space, which again, you have to have that market for the overflow when things don't get built to speed as quickly as you want them to, for sure. But not all AI stocks are similar. I like the semiconductors probably the most. And I love that NVIDIA has done nothing in the last 6 months, except for report 2 great quarters to make their valuation look more attractive. The fact that NVIDIA is going to unveil a new inference processor tells you that they need to be ready for the future when the high-end large language models, when their training almost hits a saturation point in technology, not getting smaller, cheaper, faster. And that's going to leave the semiconductors who get smaller, cheaper, faster in an uncomfortable position. NVIDIA is selling very high-priced semiconductors. Some people believe that they've hit their peak in pricing on their GPUs, and that no matter where they go in the future, they're not going to be able to charge those premium prices because there's a lot more competition now. And that should lead to margins going lower. And as margins go lower, people will revalue the stock, how much they're willing to pay for it. A $4 trillion stock still has to sell lots of semiconductors and make lots of money on those margins to create the earnings that reflect a $4 trillion market cap. JP Morgan upgraded Netflix today to buy from hold. The bank resumed coverage following a period of restriction. With Netflix dropping its pursuit of Warner Brothers Discovery, analysts believe the streaming giant is still a healthy organic growth story, citing its under-monetized ad business and strong content. And we all like the fact that this is a really tough one, because I'm going to cross into some politics here when I say we. The fact that Netflix isn't taking on a large amount of debt, we breathe a sigh of relief. Let's move on. Goldman Sachs downgraded Novo Nordisk to a hold from buy. They lowered the drug maker's price target to $41 from $63. Goldman pointed to the disappointing results in the recent trial for Novo Nordisk CagriSema, which is a next-generation obesity shot, which failed to outperform rival Eli Lilly's Zepbound. Eli Lilly is the favored stock of the two. I would be careful, because a lot like the NVIDIA story, there is competition out there now. And when NVIDIA had no competition on high-end GPUs, it was off to the races, off to the markets, and premium margins. Same thing with Eli Lilly. They have a great supply chain and great manufacturing, way better than Novo Nordisk. And that has helped create these offset gains. But the competition's still there, so pricing could come under attack one day. So Palantir was a hot AI stock with retail investors, and then it fell out of bed. It's back on the bed right now. It's jumping up and down. Shares are popping on the Middle East turmoil, despite impressive recent business results driven by corporate AI software. Palantir has lost some of the previously rapt attention of individual investors, a group of shareholders who were a cornerstone of the stock's more than 400% rise over the last 2 years. JP Morgan analyst Arun Jain, who keeps a close eye on trends amongst individual traders, retail investors, said that retail's paused on Palantir purchases last September. Stock topped out not long after that, hitting a record $207.52. It's currently at $144. Shares are down roughly 30%, a little less after today. The attention of the market's now clearly on the war with Iran and the wider region. Palantir's one of the companies that's using AI to help the U.S. government and defense and intelligence contractors. Israel seems to be getting the company a second look as far as contracts go, because the U.S. government gave Palantir a $1.9 billion deal last year. Tesla sales have stabilized in Europe. The problem, though, is when you look at that on the surface, you're like, oh, that's not a bad thing. That's good news. Stabilization. The bad news is Europe remains a small market for Tesla, so stabilization there isn't a boon. It would be in a bigger market like the US and China, where Tesla sales continue to struggle. Back to NVIDIA for just a second. They also announced this morning a pair of $2 billion investments into Lumentum and Coherent, which includes purchase commitments for their optical technologies. There's a lot going on with NVIDIA. Apple unveiled a $599 iPhone 17e with an A19 chip. Notice that they didn't release this during the holiday season. They released it post-holiday season because they wanted people to buy their $799 iPhone 17 or the Pro versions that run up to $1,200 to $1,400. The new model goes on sale March 11th to users in emerging markets and enterprise customers. Not everyone in the world wants a super expensive phone. I've heard a lot of people talk about going back to flip phones. No, not a lot of people. I've heard a growing number of people talking about going back to flip phones just so we stop looking at our phone all day long. Looking back at Facebook, or even more importantly, Meta, in the bigger picture of it, Facebook's had a lot of competition. I guess today's morning podcast, I'm really hitting on NVIDIA was perfect until it had not perfect. NVIDIA was hitting their numbers perfectly. Their margins were fat when they had no competition. Now more competition's coming in. And competition is something that can lower prices and price wars. And Eli Lilly and Novo Nordisk will likely see that in the coming years. Novo Nordisk has already announced big price cuts for 2027. Now, Facebook had competition, and this is a little bit different because we're not looking at a product with a defined dollar amount where prices can be cut. But Facebook had competition from names like 6 Degrees, MySpace, Friendster, a long list of social media sites that failed. Why did Facebook win? Ultimately, they got into college campuses. Instagram was blowing up. Zuckerberg and company saw a potential threat to Facebook, so they bought the competition. Instagram had just 13 employees, so they bought them for $1 billion. And that was a woohoo, what? When Snapchat Stories concept provided wildly popular results, Meta and Mark Zuckerberg just copied it. So sometimes you can buy your competition when they're younger, and sometimes you can take a look at features of competition and absolutely rip it off. We'll talk more about that in today's afternoon podcast. I have an event coming up that I'd love to see at Beyond the Noise, Navigating Wealth in Uncertain Times. It's more important today than last week, huh? As the bombs in Iran are making a lot of people question market conditions. I'm coming into Lafayette March 11th, Wednesday. It's a couple Wednesdays from now, so about 10 days. 6:30 to 8:30 in the evening. Presentation with Stephanie Richman and Nathan Rogers. It's a wealth preservation and retirement planning event, so it's ideal for people who are 50 plus, either in retirement or heading towards retirement. It's free. Trying to understand today's markets, trying to understand what you're doing right and wrong with your financial products in retirement. If you're just in the S&P 500, you're making a mistake because you're not diversified enough. Big winners this year are in foreign markets, small cap markets, mid cap markets, not the large cap S&P 500. You need more structure and organization? This is a great event for you. Sign up for the event at robblackshow.com. It's robblackshow.com. We'll take a break here. Be right back.
These days, retirement planning is more complicated than ever. So set aside Wednesday evening, March 11th, and get ready to learn some strategies for navigating wealth in uncertain times from Stephanie Richman, Rob Black, and Nathan Rogers. This event will focus on retirement income, tax strategies, estate planning, and tax planning. If you're at or near retirement with at least $500K in investable assets, this seminar is for you. Stephanie will explain how to transition your portfolio from the accumulation phase to the income phase, which accounts to draw from first, how to protect your estate from long-term care costs, and much more. Learn how to invest during inflation and interest rate moves, Social Security strategies, and managing IRAs and 401ks in retirement. Rob Black will share market happenings and trends. That's Wednesday, March 11th, 6:30 p.m. at the Lafayette Library in Lafayette. Space is limited, so sign up today at robblackshow.com. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not on offer to sell or a solicitation to buy any security. Member FINRA SIPC.
So we've been open a couple hours now, and sure enough, when the missiles fly, it's time to buy. Looks like the markets have turned somewhat positive. Although, again, trying to keep some perspective here, we're close to all-time highs. We dipped a little bit this morning. Now the S&P 500's up 7, up 0.1%. The Dow Jones Industrial Average is about break even after being down 250 plus an hour ago. So it's down just 4 points, down 0.01%. And the Nasdaq's up actually 0.5%, up 115 points to 22,782. The Russell 2000's up 9. Gold has lost a little bit of its luster in the last hour. It is up $65, up 1.2%. It was as high as $5,425 an ounce. Now it's at $53.13. Bitcoin still is proving to have a very good day, up 5.3%, sitting at $3,494. That doesn't sound... No, it's up 3,400. Yeah. Speak English, Rob. Bitcoin sitting at $69,413, up $3,900, up 5.3%. BYD, it's a Chinese electric vehicle maker. Their stock jumps on a disruptive tech teaser, despite a 41% sales dip. I've said this a few times in the last few weeks, but it's a theme that I want to hit on again. The United States is losing the EV war to China. And right now, the United States is losing the robotics war to China. But Chinese EV maker BYD jumped today. They said they would reveal a disruptive technology at an event later this week. That's interesting. Rumors suggest BYD's new details could be linked to a large-scale deployment of megawatt-level flash charging infrastructure. The Chinese automaker is reportedly testing a 1,500-kilowatt charging system and a dedicated flash charging app. The company was spotted testing the chargers over the weekend. It's interesting to note that when I say China's beating us on robotics and China's beating us in EVs, they're also beating us on energy. Being able to deploy AI is going to be a problem in the United States, not so much of a problem in China. Amazon just had a bad month because of their extreme AI spending. They're a company I believe that will benefit greatly from AI on logistics and greatly from AI on robotics. I think they'll continue to do well with how they manipulate their advertising. I'm not sure if you think of Amazon as a retailer or if you think of it as an advertiser, but very similar to Netflix, they're in the ad business. You really got to know your product well. Amazon's starting to look like a cautionary tale because its investments are so high, but the returns are amongst the lowest so far. Amazon was down roughly 2% this morning as part of a broader sell-off. On Friday, Amazon said that they would invest $50 billion in OpenAI. As part of the circular nature of the deal, OpenAI also will spend an additional $100 billion over 8 years under its current agreement with Amazon Web Services. People don't like that, circular deals. Wall Street is not into them in any way, shape, or form. SpaceX is going to expand Starlink's mobile coverage as it seeks $1.75 trillion IPO valuation. Starlink expects to connect 25 million monthly users by the end of the year on a service that the company says will allow video calls and streaming. The company aims to grow from 10 million active monthly users today to 25 million, like I said, by the end of 2026. The service is designed to give consumers access to high-speed internet, including video calls in remote areas, using unmodified smartphones. So no special equipment will be needed. When your phone's in your pocket, when you're in your car, you're connected to Starlink Mobile. It should look and feel like you're connected to a high-performing 5G terrestrial network, so says SpaceX. SpaceX is positioning Starlink Mobile as a complement to carriers like AT&T and Verizon, but isn't it going to be a direct competitor as well? I think so. The service is meant to fill coverage gaps in remote areas, at sea, during emergencies, when terrestrial networks go down. T-Mobile was SpaceX's first and remains its only U.S. carrier partner. The mobile push comes as SpaceX is trying to get those IPO ambitions clearly defined as why you want to invest in a company worth $1.75 trillion. If it were to go to market today, it would probably be about $1.25 trillion. So you're seeing $500 billion of hype needing to be generated between now and when they come public. Is it fair to say, and you can drop me an email and tell me I'm crazy, but is it fair to say that Mark Zuckerberg is not very photogenic? I think that's going to be the new way I describe him. Today is Read Across America Day. 40% of U.S. adults didn't read a single book last year. I would imagine that number would be much higher. A recent YouGov survey suggests that American adults might also have turned the page on reading, with 40% of respondents saying they didn't read a single book in 2025. In that poll, it found that the median American reads 2 books. The average number of books read per year by a person was 8. That's largely owing to how stats skew the top 4% of readers, who got through 46% of all books consumed were done by the top 4% of readers. I find that interesting. I don't see an investment angle, but do you remember Amazon once was famous for delivering books, selling books? It's the world's largest bookstore. Now, do you think of it as Amazon Web Services? Do you think of it as an advertising company? Do you think of it as a retail player? Poetry books are the least popular. Right in the middle are historical fiction and science fiction. On the top, mystery and crime and history books. I would not have figured that. Shares of Exxon and Chevron are moving higher today. Analysts suggest out-of-region energy stocks could gain disproportionately if the Persian Gulf is shut off, serving as a hedge. ExxonMobil, Chevron, and other stocks, depending on where they do most of their work in regions around the world. The Mideast region right now is under stress. ExxonMobil up 0.75%, Chevron up almost 1%, ConocoPhillips. So you're thinking the out-of-region energy stocks. It's an interesting way of thinking, no? One of the big risks on the Middle East conflict, and I've seen this numerous times in my career, I've seen the Gulf War I and the Gulf War II. There's a buildup of troops. There's a anxiety. Energy prices move higher. And the wars seem to be actually pretty short and easily won by the military might of the United States compared to what Iran or back then Iraq could throw at us. As a father, I'm really, it's interesting because I've gone through 30 years of investing, and probably your first, strike, it alarms you as an investor, and you get like nervous. What's the market going to do on Monday? And then today, like every other strike, losses early, stocks recoup their early losses. This is it's one of those problems that I like talking about. There's not much of an investment angle right now other than Robinhood. But the prediction markets, Polymarket's social media account has reportedly identified signs of insider trading on its prediction market platform. Hours before American and Israeli missiles rained down on Iran, killing the country's leadership, a Polymarket trader loaded up on bets that Ayatollah Ali Khamenei would be out as supreme leader of Iran by March 31st. That trader's $23,000 position turned into a $120,000 profit. Will insider trading draw the attention of the United States government and oversight? Or will prediction markets have an unavoidable part of their business model being insider information? Back on December 16th, an anonymous account on the prediction market platform, Polymarket, made a $68,000 bet that Kevin Hassett would be nominated as the next Federal Reserve chair. It's wild how this is happening, and we just seem to go look the other way. My son does a little bit of prediction market betting. It's my account, and I'm watching it. I'm a horrible father for letting this happen, but all of his friends are doing it. And they probably don't have the dad who's overwatching them. But it's wild that, LeBron James could, and I'm not LeBron James, let's say player X, could tell his, son, hey, I think I may get the flu tonight and probably not play. Wink, wink. And he could bet that guy gets 0 points. And if he's one of the best in the league, that's unheard of. But people are starting to get caught, too. I find that interesting. I'm not a big fan of prediction markets. because of that insider information. So Paramount's winning bid for Warner Brothers should give Netflix a run for its money. Ultimately, as far as content goes, not really. But the big winner of the Paramount Skydance winning the bid for Warner Brothers Discovery is, I think it's Netflix and Disney and any streamer out there, because there's fewer competition. We've talked a lot about competition today. So with fewer players out there, it'll be easier for them to raise prices. So on top of its cable networks, including Comedy Central and Nickelodeon, Paramount is the owner of streaming platform Paramount Plus. Warner Brothers is known for movies like A Night of the Seven Kingdoms and Superman and Batman. A Night of the Seven Kingdoms is the newest one on HBO Max from Game of Thrones. It was a cute little 7-episode show. It'll be coming back next year. It was a nice break from the massive sets that Game of Thrones has done in the past with dragons and battles of hundreds of peoples on beaches and beheadings. This is a buddy film almost between a knight and his young squire. I watched it. I got hooked on Game of Thrones early because I had a friend who was a Game of Thrones nerd. And he was like, you gotta watch the show, you gotta watch the show. So I watched it when it first premiered and I got into it. By the time it went 6 or 7 seasons, I was bored out of my mind with it. But you still have that weird curiosity. And that's one of the reasons why Paramount Skydance wanted to pick up Warner Brothers, because of the franchise angle. And they'll be able to dip into Batman numerous times over the next 40 years. I've taken my kid to a couple Batman films, a couple Superman films. I'm probably guessing he'll take his kid to a couple Batman films and a couple Superman films in his lifetime. Paramount Skydance hired Amazon ad vet Danielle Carney and Tribeca's Chris Brady to jumpstart ads push. It is interesting when you surf around the different streaming services, how they're all ever so slightly different in the quality of ads that they have. President Trump released some comments in the last 30 minutes. He says U.S. operations are ahead of projected timetables. Initially expected to last 4 to 5 weeks, but could continue longer. He emphasized the objective is to prevent Iran from obtaining nuclear weapons and destroying its missile capacity. He noted the U.S. has knocked out 10 Iranian ships and continues large-scale combat operations. He stresses that Iran cannot fund or direct armies outside its borders. He describes the strike as the last best chance to stop Iran's nuclear ambitions. I think Comedy Central, The Daily Show, did a funny thing on that statement from last year when the United States went after the big mountain in Iran to try to blow up their nuclear capabilities and referred to it as complete obliteration. And now, less than a year later, they're weeks away from having a nuclear weapon. This is just, it's mind-blowing. And again, let me give you an example of where I'm going at with this. How many times have there been strikes in the Middle East now since you were a kid? The numbers are adding up for me. And I had dinner, cooked a steak on the barbecue last night with my kids. They weren't stressed. They weren't watching CNN to watch the missiles hit, with Wolf Blitzer talking about Scud missiles, and it's almost boring. I don't know what that effect is, but it's been normalized. It's happened so many times in my life. Oil spiked towards $80 a barrel this morning. It becomes a real stress at $90, and every $10 after that, it's exponential. Stocks have recouped their early losses. I'm a little surprised, but not huge. The dollar is jumping. The dollar has become a safe haven asset again. The dollar is strengthening. Up 1% today to $98.42 on the DXY index. Ticker symbol DXY. It's the dollar index, which tracks the value of the currency against a basket of major peers. Let's take a look at some winners and losers out there today. I've already hit on the oil plays, Chevron, Exxon, all moving higher. ConocoPhillips, Coterra Energy, Devon Energy, Diamondback Energy, EOG Resources, Occidental Petroleum. Cruise lines are dropping. Carnival and Royal Caribbean, Norwegian Cruise Lines, all of them. conflict in the Middle East will make their marine fuel cost go higher. Same thing with airlines, American Airlines and Delta. They're not going to be really hurt by losing flights to Tel Aviv, Israel. That's not a big thing to them. It's a very small part of their business. Tourism is very small part of the business for cruise lines in the Middle East. It's less than 4%. It's the cost of doing business. It's the energy costs. Gene therapy maker Unicure sank 36%. Ouch. The Food and Drug Administration said phase 1 and phase 2 test data are insufficient to prove the effectiveness of the AMT 130, which is a therapy for Huntington's disease. Berkshire Hathaway stock's down 5% today after the big giant investing conglomerate reported fourth quarter earnings on Saturday. Operating profit after taxes fell 30%. That sounds horrific, but it wasn't as bad as you think it is. It was tied towards some insurance costs. So some analysts are saying that's a buy today. An interesting story from Friday was that Anthropic lost the government contract. I wouldn't even say lost. Maybe they gave up a government contract, saying that they don't want their technology used for wartime activities and monitoring U.S. citizens. OpenAI jumped right in and said, we'll take that business. So a big thing that happened over the weekend was that Claude by Anthropic saw a lot of downloads. It was tops on Apple's free apps after that Pentagon clash. But they also saw elevated errors. Defense Secretary Pete Hegseth said the Pentagon would be labeling the company a supply chain risk. Claude's status website showed a degraded performance on Claude Opus 4.6, its latest model released last month. So it came under stress with more users. Claude is back up and running across Claude.ai and all their apps, they've said. So something happened. I thought it was interesting, and it caught my eye this weekend when it was the number one app on Apple Store. It's interesting how people quickly turned on OpenAI. OpenAI is not well liked right now. Is that the right vibe I'm getting? Are you getting that as well? 70% of Americans who are single, 70% of single Americans would go on a first date at a fast food restaurant. What restaurant do you think that is? Chick-fil-A. Depending on where you are in the country, Chick-fil-A sandwiches cost $5 plus. You can get an ice cream cone for less than $2. So maybe it's a cost-efficient way to go on a first date. And that survey made me think about me in my 20s, 30s, 40s, and 50s. And how I used to think certain restaurants, and I'll say it, for instance, like Outback Steakhouse, was pretty good in my college years. But through the years, I was like, did their steaks become worse, or did I just get a more refined palate and demand higher quality? Do you have any of that, or is that just me? Don't forget to sign up for the March 11th event, Beyond the Noise, Navigating Wealth in Uncertain Times. I didn't plan the incursion on Iraq and the oil fields for the March 11th visit, but it coincides, oddly enough. Lafayette, California, 6:30 to 8:30. I'll get there around 5. I'll have about 4 or 5 CFPs with me. Session will help you cut through the noise. It'll help you translate what you're seeing in the markets. It'll make you feel better about your retirement. It's a wealth preservation retirement planning event. It'll connect taxes and retirement and long-term goals. Whether you're nearing retirement, recently retired, or simply want a stronger framework, sign up for the event at robblackshow.com. It's robblackshow.com. Coming up, Stephanie Richman's going to talk a little bit about what she's going to be talking about at the event. My afternoon podcast, I'm working on it. It's going to be a doozy today.
Retirement planning is more complicated than ever, and it can be hard to even know where to begin. So set aside March 11th, Wednesday evening, 6:30 p.m., and get ready to learn some strategies from Stephanie Richman, Rob Black, and Nathan Rogers that can help you retire better and pass on your estate while navigating wealth in uncertain times. That's March 11th at the Lafayette Library in Lafayette. The event runs from 6:30 to 8:30 and will focus on retirement retirement income, tax strategies, estate planning, and tax planning. If you're nearing or you're now in retirement and have at least $500,000 in investable assets, this seminar is for you. Stephanie will explain how to transition your portfolio from the accumulation phase to the income phase, which accounts to draw from first, how to protect your estate from long-term care costs, and much more. Learn how to invest during inflation and interest rate moves. Also, Social Security strategies and managing IRAs and 401ks in retirement. Rob Black will share market happenings and trends. Navigating wealth in uncertain times is appropriate for individuals with at least $500,000 and either in or heading to retirement. Wednesday, March 11th, 6:30 to 8:30 at the Lafayette Library in Lafayette. Sign up for the event at robblackshow.com.
I'm Rob Black. Joining me now, Stephanie Richman. She's a certified financial planner with EP Wealth. I love that designation. There's a lot of education that goes into it, a lot of insight, a lot of professional training, and a lot of experience, which is something you want as you approach retirement. I do have an event coming up where Stephanie Richman is going to be speaking and presenting Wednesday, March 11th, 6:30 to 8:30 in Lafayette, California at the Lafayette Library. It's one of my 2 evening events planned for the East Bay this year in 2026. So one of them is going to be knocked out pretty soon. You can sign up at robblackshow.com. Let's talk about the title of the event. It's called Beyond the Noise, Navigating Wealth in Uncertain Times. Prospects, clients, individuals, neighbors that are all worried about volatile markets. What are some things that we need to be aware of when it comes to questions that we should be asking or maybe answers that you have for us?
That's a good question. I think the key in times like these, where the narrative of the day, i.e. the current thought about how AI is going to impact the workforce or impact our daily lives might sound. This last Monday, right, we had a report come out by a company called Citrini, and it talked about how fast AI might infiltrate the workforce and do away with jobs and impact the economy, therefore, et cetera. So the narrative of that day caused tech stocks to take quite a tumble, particularly software-related stocks, something we've seen on and off again this year. And interestingly enough, as a result of this volatility, the S&P 500 is up less than 1% on the year. Shocking, but notable, and I digress perhaps a little bit, but bonds are actually, when I looked at the Barclays or Bloomberg aggregate bond index at the same time, it was up 1.4%. The thing to keep in mind, and what I'm getting at is when times are uncertain, not everything gets impacted the same way at the same time. And by that, not every investment is equal. And so different things will go up, other things will go down, and that happens all the time. And so one of the key things to make sure of in uncertain markets is that you are well diversified. Sometimes to me and to others in my business, that feels like a cliche. I've been doing this a long time, and that tenet, if you will, that guidance plays out over and over and over again to minimize risk, ensure that your portfolio will likely grow over the long run. In fact, it's funny, I read a great line the other day, and it was the cheapest form of risk reduction is diversification. I really love that.
I like it. And what you just talked about with the AI fears that have stricken the market, it's a doom and gloom scenario. We've had doom and glooms before in my career, and we've had doom and glooms over the past 100 years. In the 1970s, there was a gloomy forecast that the world was going to end, in large part because the planet was getting too cold. And now we're talking about global warming. In 2000, we thought the computers were going to fail when the 00 hit, and suddenly people were no longer 90 years old. They were negative 10 years old, and they wouldn't get their Social Security check. So we've seen the doom and gloom before. And typically it pays to ride it out. But sometimes you need someone like you, a veteran, to say, we've seen this before. So if someone is nervous about tariffs or inflation or interest rate changes, hikes, ups or downs, falling stock markets in retirement, that's not a good time to have that anxiety. How often do your clients call you to get a little extra hand holding, or how often do you call them when you see the doom and gloom scenarios start to hit?
One of the things I pride myself on is that I know my clients pretty well. And I've had these conversations with many of my clients over many years, and they know they can repeat back to me that it's important to stay the course. It's so interesting. It doesn't mean that nerves don't get rattled in the interim, but I do know who those clients are, so I will tend to make a point of giving those clients a call should it feel like it's the right thing to do to steady their nerves. But what we do is, having built a financial plan, if the market takes a good tumble, what we can simply do is, and I don't mean to make it sound simplistic or understate anything, nerves are real, but having a financial plan built allows us to jump back into it after the market's taken a tumble to see how they would fare from here or from there on out through the rest of their years, to see if in fact they're going to be fine. And it is a form of statistical analysis called Monte Carlo simulation. And I tell you, it takes the gamble out because it looks at all kinds of market scenarios, whether they be really bad or really good or somewhere in the middle. That's one of the ways that I help my clients see themselves through these tough times. But it's also, again, I would say the benefit of working with a CFP, particularly one who's been around a long time like myself, or one who's part of a team that has a lot of experience, is that we've been, to your point, Rob, through a lot of good and bad markets. And we've seen that ultimately the market continues to go up. And there's all kinds of tables and charts that show us that the market tends to go up 80 to 85% of the time. So the key is to get through those times when the market isn't up, knowing it will typically come back.
And not panic.
Not panic, exactly. And it's hard to take the emotion out, but that's part of my job, is to help you do just that.
I don't have a lot of emotions. I work really well in this industry and with this example. And my spouse will be the first one to tell you I don't have a lot of emotions, but that's neither here nor there. Let's talk about, I think you were just leading into the sequence of returns, where you don't want to panic at 2019 we were up, 2020 we were up, 2021 we were up, 2022 was awful. We were down big. 23, 24, and 25 were up. The up years are easy psychologically for people to handle. It's at 1 year that it's down where you don't want to sell because you just messed up a sequence of return, and you've put yourself in the position of having to almost double. If the market goes down 10%, you got to almost get 20% up. And you had the cash and you had the fixed income, and Stephanie had the plan, but still it's that sequence of returns. It's important to know a little bit more about that. Can you give me a little color on that?
Yeah, what sequence of returns risk is just what you said, right? The market's going to go up for a certain period of time, and then you're going to have a bad year or maybe a bad couple of years. The key is we just don't know when that's going to be. So what is really important to consider is, when you're 2 or 3 years away from retirement, you want to have a good look at what you spend, what you need to meet your needs to maintain your lifestyle, and what you might consider doing if it's important to you to ensure that you've got cash set aside so you can stay calm, is you set aside an income buffer, right? You let the rest of the portfolio act as that growth generator, but you set aside an income buffer of 1 to 2 years. Some people might prefer more, but I'm a little careful on that end, because the more cash on hand typically you have, the greater drag on your long-term portfolio. But again, setting aside some cash to cover the set of expenses that you have is a really good idea to ensure that you've got it in place when the market should fall, so you don't have to worry about tapping investments when they're down.
And the opposite of that is having too much and getting the underperformance of cash versus inflation and cash versus the investments. The opposite side of it would be having too little, because you don't want to go through that period. Like you just said, sequence of returns, super important. Any final thoughts on this topic? I come to the event Wednesday, March 11th, 6:30 to 8:30 in Lafayette. California. It's Mount Diablo Boulevard. It's super easy to get to. Great parking. It's a great room. It should be a nice evening. 6:30 to 8:30 Beyond the Noise, Navigating Wealth at Uncertain Times. After the event, Stephanie can help you with a plan, a preliminary plan, as I like to call it, that does show, after we get some information from you, a little bit of a Monte Carlo scenario, or a best case, worst case scenario, as I like to call it, but I'm a little odd. Thanks very much, Stephanie. It's Beyond the Noise, Wednesday, March 11th, 6:30 to 8:30 in Lafayette. Sign up at robblackshow.com. That's robblackshow.com.
These days, retirement planning is more complicated than ever. So set aside Wednesday evening, March 11th, and get ready to learn some strategies for navigating wealth in uncertain times from Stephanie Richman, Rob Black, and Nathan Rogers. This event will focus on retirement income, tax strategies, estate planning, and tax planning. If you're at or near retirement with at least $500K in investable assets, this seminar is for you. Stephanie will explain how to transition your portfolio from the accumulation phase to the income phase, which accounts to draw from first, how to protect your estate from long-term care costs, and much more. Learn how to invest during inflation and interest rate moves, Social Security strategies, and managing IRAs and 401ks in retirement. Rob Black will share market happenings and trends. That's Wednesday, March 11th, 6:30 p.m. at the Lafayette Library in Lafayette. Space is limited, so sign up today at robblackshow.com. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.